You want a pizza, but don't have the money right now. The pizza shop says, no problem. Eat now, pay next week. That's credit. Credit means getting something today and promising to pay for it later. In most cases, with a little extra on top called interest. Interest is the extra cost you have to pay for not waiting. Let's say the pizza costs $10. If you decided to pay today, the price hits $10. If you pay next month, it might be $11. This is how lenders make money. Credit is everywhere. It's how we buy homes, cars, phones, and sometimes even pizza. You're using money that's not yours yet, but you're promising to pay it back. Now here's the twist. Not everyone gets the same deal. The pizza shop doesn't trust everyone equally. If you've borrowed before and always paid on time, you're a VIP, a very important pizza person, and they will let you take one or more pizzas in advance and maybe even give you a discount in interest. But if you've missed payments in the past or walked out with a pizza and never came back, no pizza for you. That's where your credit score comes in. It's your pizza trust score, a number that tells pizza lenders how reliable you are. High score? More pizza in advance, lower interest. Low score? Less pizza, higher interest. Why? Because there is more risk with the second pizza lover. Late payment or even non-payment. That's how credit works. It's not just about lending money or pizzas. It's about trust, probability, and financial reputation. Now, used properly, credit is powerful. It helps you smooth out your finances. It lets you cover big expenses you couldn't pay up front. If you have a business, you can invest in the future, upgrade your oven, or open a second pizzeria with a credit. Credit builds economies. It fuels growth. But used badly, it can ruin your life. If you abused, credit turns into debt. And debt, when it gets out of control, is like burning the pizza and still having to pay for it. In the United States, credit use is massive and growing. By 2024, Americans will owe more than $1.1 trillion on credit cards. That's a lot of pizza slices to pay for later. In addition, nearly 30% of Americans were delinquent on at least one debt payment in 2024. Debt and a low score doesn't just cost money, it costs opportunity. People stop lending to you, your options shrink. It's like walking into the pizzeria and seeing the cash-only sign for all your pizza orders. So, what's the takeaway? Credit is like borrowing a slice. Treat it with respect. Use it wisely. Borrow only as much pizza as you can afford to pay back. Know your terms, know the interest, and know the risks, because the pizza always comes due. And when it does, you better be ready to pay. That's credit. If this video helps you, click the like button. Subscribe to the Pizza Economics channel and stay hungry for the next video.